Shares of Intel, meanwhile, CEO Pat Gelsinger warning investors on the call that he expects the chip shortage to drag into 2023. The stock's down about 5%. Did jump initially because the past quarter was fairly decent immediately as those numbers crossed last night. Joining us now is Chris Danely, Managing Director and Semiconductor Analyst at Citi Research. Chris, good to see you. I mean, there's the chip shortage aspect, but there's also the margin pressure aspect. And is that what's really weighing on the stock this morning?
Yeah, Intel lowered its gross margin outlook for the second half of the year. And, remember, semiconductors is a very leveraged industry, and so people want those gross margins to go up. Despite the full year guide raise, all of that was because they beat Q2. So their guidance for the second half went down, particularly on gross margin. And in semis, wherever gross margins go, the stock tends to follow. I think that's why the stock is down this morning.
On the demand front, though, were the comments fairly positive? Can that last, whether it's from PCs or elsewhere? And what does it mean for the other names in the sector?
Yeah, that's a very interesting question. So I think you've got sort of a tale of two end markets. On one side, for Intel server, the enterprise market is coming back. Think of enterprise as it's like businesses, right? So whether it's Citigroup, who I work for, or your average insurance company, people are going back into the office, and these companies need to upgrade their computer systems, and so that's helping Intel. On the other side, they've talked about this component shortage in the PC space, and so their PC business is really lagging in the second half of this year. And as you alluded to, the CEO talked about that extending into next year. We've written on this for the last couple of months. We actually have some doubts as to whether or not this is true component shortage or there's actually some demand issues in PCs, because it's hard for us to believe that component shortages are going to weigh on demand for the next, year and a half. I think that there's, perhaps some demand weakness that's being masked by these component shortages out there. That's our big fear for PC.
So then, Chris, just to dig in a little bit more, how does this set up for a name like, for example, AMD, which I believe is reporting next week and has been taking market share from Intel? And as we see these potential chip shortages ripple out, I realize auto has been the big focus up until now, but you see it start to ripple out into other sectors as well, other industries as well. Who's positioned better? Who's positioned worse?
Sure. So clearly AMD is positioned better, in our opinion, in the majority of the opinion out there, because they're gaining market share over Intel. And most importantly, their biggest market share gains are coming on the server side. So that's where you get the 80% gross margins, and those chips sell for $700-800. So we expect much better news out of AMD. We think that that's part of the reason why Intel's forecast for the second half is a little bit weaker, even though they wouldn't want to admit it. And hey, if my biggest competitor was kicking my butt, I wouldn't want to admit it as well. On the automotive and the industrial side, we actually expect those shortages to ease at some point in the second half of the year, and then in the first half of next year, things start to catch up. On the good side, I think that that's going to lead to some upside, particularly on the pricing and the margin perspective. Texas Instruments, for example, reported this week, had some nice upside for the quarter. We expect other companies like an SPI to also report upside that sell into the automotive market.
Shepard Smith here. Thanks for watching CNBC on YouTube.